Welcome to Option Rally TV. Let's take a look at last week's market action and what to expect this coming week. Russian troops spook markets, the Euro Rallies As Draghi sweet talks markets, gold and oil on a crazy ride. Let's take a quick look at what is happening in the global markets now. The big event this week was the ECB press conference as Mario Draghi sweet-talked the markets and sent the euro rallying to a 2014 high. This set the stage for Friday's equity markets ahead of the U.S. non-farm payroll release. The Dow climbed 0.2% while the S&P 500 ended slightly in the green. The Nasdaq ended in the red. The lackluster data comes at the end of a week that started on a down note as a political and economic crisis in Ukraine intensified and Russian troops got involved. Tensions between Ukraine and Russia continue on a diplomatic level, though most investors feel that the worst may be over. International leaders have instituted some sanctions against Russia and offered help to Ukraine as they try to resolve the situation. Investors got a surprise on Friday when the U.S. economy added 175,000 jobs last month, an improvement from January and ahead of economists' expectations. The unemployment rate ticked up to 6.7% from 6.6% the prior month as more Americans joined the labor force. Traders made bets that the Fed will taper again at its meeting later this month. Aside from the jobs report, investors are also keeping tabs on the latest earnings. European markets and Asian markets finished the day mostly lower. Japan's Nikkei closed with a gain of about 1%. Across the Pacific in Oz, the economic situation looked bright after the RBA held rates on Tuesday. Economic data seemed to just turn hot. GDP printed better than expected, followed by retail sales and trade numbers. In the foreign exchange market, the U.S. payrolls report was considered a piece of encouraging economic news. After the U.S. payrolls, the USD JPY jumped higher from about 102.90 to around 103.70 before some profit-taking occurred. The pound remained well bid at the 1.67 level after services PMI beat forecasts and the Bank of England held rates and policy. Early in the week, traders ran for safe haven, but the tensions in the Ukraine quickly eased as traders went looking for risks on trades, pushing the Aussie back over 90 and the Kiwi above 84. The Canadian dollar spent the week on a roller coaster after the Bank of Canada held rates and the jobs market deteriorated. The CAD ended the week close to 1.110 to the USD. Moving to the commodities market, gold broke above the $13.50 price on risk aversion after it was reported that Russia had sent troops into the Ukraine and the Russian Navy had demanded that 2 Ukrainian Navy vessels surrender. Most of the news turned to be rumors as Russian troops were on military exercises on the border and were ordered back on Tuesday. Gold subsided and ended the week at $13.40, showing a gain for the week. Oil ended the week at about 102.64 after falling close to $100 on Thursday, but touching 105 on Monday on fears from Ukraine. Late in the week, lackluster data and a high inventory sent oil tumbling, only to recover as tensions seemed to climb a bit on Friday, but global data supported a stronger recovery after the U.S. jobs data. This is Amy Anderson from Option Rally signing off. Follow me on Facebook and watch for our new financial terms of the day in our weekly event news. And of course, I'm waiting for your like below if you enjoyed today's update. Have a great week.